I'm John Schwinghammer, the author of Purple Chips. I've been in the business for 30 years. I wrote Purple Chips because I was looking for a better way to identify great companies at the right price. Purple Chips was published by Wiley in 2012, and it's available everywhere. So I came up with Purple Chips because it's a visual approach that shows you how to identify quality companies and tells you when to buy them and when to sell them. Purple Chips are the royalty of blue chip stocks. These aren't ordinary blue chips. These are the best companies that you as an investor can own. We analyzed all the North American listed stocks and came up with around 300 companies that are unparalleled in quality. Now, Purple Chip stocks have to meet three basic criteria. They have to have stable and predictable earnings, they've got to have 7 years or more of rising profitability, and they have to have a market capitalization of at least $1 billion. Purple Chip shows you how to buy low and to sell high. Our methodology identifies low-risk entry points based on historical valuation ranges. What we do is simple. From our list of Purple Chips, we look at the valuation range. We buy when the valuation hits a low target, we hold, and we sell when the valuation hits the high target, and we repeat the process. Let's look at a real-life example. I'll show you how Purple Chips bought and sold Oracle between June 2012 and April 2014. This is a 20-year chart of Oracle in June 2012. Each of the yellow bars represents the trading range for 1 month in Oracle. The stock price scale is on the right side. The white line is the trailing 12 months earnings per share, or EPS, history. The EPS scale is on the left side. An important note here is that the EPS line that you see is tied to the last trade of the stock. So imagine if the shares were at $36, that white line would be shifted higher across the chart. This is telling you about valuation. This slide shows Oracle 1 year later in June 2013. The yellow bars are the stock price, and the white line is the EPS history. Again, notice that the EPS line is tied to the last trade of the stock. The chart shows the last trade at $31, so the EPS line ends here. Note how the white line happens to coincide with a lot of the low points in the stock price. Now, this slide shows Oracle on March 31st, 2014. This shows Oracle at $41, and note how the EPS line is considerably higher relative to the stock price. This is where we took profits and made over 46% plus dividends in little more than a year and a half. Now let's talk about track record. From 2012 to July 2014, we've had 63 investments that we closed. Our average gain was 18%, excluding any dividends that we received. 41 of the stocks were dividend payers. Our typical holding period for a Purple Chip stock is about 12 to 18 months. And good things happen to Purple Chips. Purple Chips are such high-quality companies that we often get positive surprises. In July 2014, PetSmart announced that JANA Capital had taken a large stake in the company and wanted changes. The shares rose 14% in 1 day. In 2013, Astral Media was taken over by BCE. We made 53% on this one. And then in Canadian Tire, the same year, in 2013, they announced a spin-off of their real estate assets into a REIT, and the shares jumped, and we made about 23%. You buy low and sell high with Purple Chips. When markets are cheap, we become fully invested because we have low valuation signals. When markets are expensive, we have high cash positions because we realize profits when stocks are at high valuations. We're in the news. We've been in the Wall Street Journal, on Bloomberg Radio, on Jim Cramer's show, TheStreet.com, the Business News Network, the Globe and Mail, CTV, CBC Radio, Global TV, Canal Argent, and others. We're on the web at purplechips.com. On Twitter, you can follow us at PurpleChipman. So in conclusion, put some purple in your portfolio and take the guessing out of investing.